Hello everyone, in this video, we're gonna look about a new IPO in the market, Dharmaj Crop Guard Limited. In this video, we're gonna look about what is the company is doing, how is their fundamental is doing, what they're gonna do with the money from the IPO, whether we need to hold it for a long term or book it in the listing kinds. We will talk about all the things in this video. Watch the video completely and share your comments and feedbacks. So this company was founded on 2015 and production started in 2016 as they mentioned in their own website. I'm in their own website only. So they are an agrochemical company. They are manufacturing, distributing and marketing of chemical formulas for insecticides, fungicides, herbicides, plant growth regulator, microfertilizer, etc. etc. And they supply through their own in-labeled brand licenses, and they target most of the Indian farmers, and they export their products to most of 20 countries including Latin America, African countries, Middle East. So even though this company is just 6 years, like we can say 7 years old from the company founding date, but the promoters are like experienced in this sector. Whereas Ramesh Bhai is around 28 years experience in agrochemical industry. Jaman Kumar, who is an whole-time director, he is 22 years. Jagdish Bhai, who is having a 21 years of experience in agriculture industry. So like that, so on. The core team looks good in this. So they have one single manufacturing capacity located at Ahmedabad, Gujarat, and they produce all the products inside this same factory. And in addition to this, they are planning to expand their manufacturing facility in Bharat, in Gujarat, for manufacturing the same products and for exporting to international countries. So when we look into their financials, their balance sheets is looking strong, whereas their assets, non-current asset is increasing, their current asset is increasing. And if you see, their equities is also was increasing in the past, but it was little bit increasing. The only thing which I notice here as a major issue is they are keep on borrowing for long term, and in terms of short term borrowings also it keep on stabilizing in the same level. They are not settling it, so they don't have an enough working capital, so they have a short term financial needs. So in long term, they were having 5 crore, then have 15 crores, then 25 crores, then now they have around 36 crores of borrowings, which is not very good for a company. The next thing, if we look into their profit and loss, they are making good amount. Like for example, 199 crores in 2020 and 303 crores in 21, 396 crores in 22. Okay, there is a little bit increase. But if you see, in first 4 months, they made 221 crores. For example, we have 12 months. They have done already 4 months. If we just multiply approximately into 3 of 221, we can average around 600, which is far away from this 400 of the previous year, that is 396. So they have a very good income growth here. Then if you, at the bottom, you can see there was 10 crore profit, then 20 crore profit, then 28 crore, and within 4 months they made 18 crores. As usual, when you multiply, it comes around 55, and which is far away from the 28. So even though we cannot able to guess like multiplying directly into 3 times, but anyway lesser than they will be above 28 is my view. So their earnings per share is also considerably increasing, 8, 12 and 11, because they diluted the equity recently. And whereas the new basic EPS is expected to be better than the previous year, even though they are diluting and new shares are coming in. Next, what the money which they have, what they're gonna do with that money. So they are generating 216 crores from the fresh issue, where about around 52 crores is being from the offer for sale, which goes directly into the share promoters, which we don't need to talk about. Out of this 216 crores, they're gonna use around 105 crores, which is almost half of it, for the expansion of the manufacturing facility, as I said earlier, they are making the new facility at Bharat, Gujarat. Then around 45 crores for their working capital, which we talked earlier. They have a short-term borrowings constantly. They will try to reduce that. So in turn, they can reduce the finance cost. And then 10 crore, they're gonna use it for repayment of loan. Probably it will be used for paying off the long-term debt, which is around 36 crore. They will pay 10 crores. So eventually they can reduce the cost of the debt. This IPO has a band of 216 rupees to 237 per share. Probably it will end up at 237. The market, agrochemical market, is growing in a very slow way, but the price could be in a favor of them, because when there is a food inflation comes, the need for the fertilizer will rise based on the need for the food. So which in turn the government may step in to reduce their taxes or subsidies. They can provide subsidies, or anything can happen which is positive for this company. So for one lot, we need around 14,220. Around we will get 60 shares. That is the thing. The IPO start date is on 28th and it goes till for 3 days till November 30, and they get listed on December 8. So let me go about what is the current trading price of this IPO, because the anchor investors or angel investors will be keep on buying the shares before coming to the IPO. So if we see here, the current rate as per the today's morning rate, it is around 55 rupees premium paying, whereas the current rate is around 292, which is around 23% profit from the listing price, which is like issue price. Okay. If the market tends to be stronger, because if we see Nifty is also going stronger day by day, and if we look, we can expect listing gain of around 25% to 35% roughly. And I will suggest you people to apply for multiple lots in multiple accounts. In terms of you asking whether we can hold it for a long term or whether we can hold it for a listing gains, even though the market is growing slowly in this agrochemical industry, it will start to boost up because the need for the food will be increasing in the upcoming years. So this IPO can be held for a long term if you have appetite to hold complete IPO. If not, it will be, if you get allotted, it will be surely listing it around 30%. You can hold around 50% of the share and you can exit 50% of the share, and you can keep your investment ready for the next IPO. For the fresh buying, at the listing date, it may be available at higher cost and expecting little bit slowdown in upcoming days. So we can add up there. And if you people badly want to add an agrochemical industry into your portfolio, this stock is also one of the stock which we can consider. Thanks for watching this video. Share this video to your friends. Keep supporting. Thank you.